Now, Barclays has just reported earnings this morning. Joining us now is the CEO, Staley. Jez, very good to have you with us as always. And I'll start with some positives. The equity market number is described by one of my colleagues as blowout this morning, Jez, up by 32%. How happy are you with that side of the business?
I think we feel very good about how the bank performed overall. It's one of the best quarters we've had in many years. To generate a 12.3% return on tangible equity is a great result. Over 1.4 billion pounds of after-tax earnings. But it was across the board. Barclays UK consumer business did quite well. Our international card business did quite well. And the corporate and the investment bank did well, particularly the investment banking side and the markets business.
Yes, there's always a lot of attention on the fixed income side of things. So I want to ask you about FIC revenues. They look to be in line with estimates, a little bit weaker perhaps than some of the growth reported by Wall Street peers. Does that hurt, or is that not what you're worried about this morning?
No, I mean, the overall markets revenue for the investment bank on dollar terms was up 15%. That would be one of the best performances of an investment bank, whether it be Europe or the U.S. So we feel very good about that, as you said, led by our equities group, which was up some 37%. Our FIC revenues were up 1%, which we think was pretty good given the nature of the quarter. Overall, we're gaining market share for the third quarter in a row. But also, very importantly, as we point out, the return on equity in the markets business with this sort of performance is double digits. It's above our cost of capital, and that's important given our strategy as a bank.
The currency clearly matters then in terms of when you're describing these numbers. Can I ask you whether this is a business that is now running free in your words, Jez? You spoke to one of my colleagues recently and you said that was the future for the bank. That was what the rest of this year would have in store. You would be freed from the legacy issues and we could see what this business can deliver running free. Is this Barclays running free already, or do we have to wait?
No, this is Barclays running free. I think Anna, you bring up a very good point. This is really one of the first quarters where we are clear of the legacy issues. There's no more restructuring. There's no more cost to achieve. There's no more major legacy issue hanging over the bank. So the bank is, as you said, running free, and we delivered 1.4 billion pounds plus in after-tax earnings. A strong double-digit return. It feels good. And now we have this diversified consumer and wholesale bank. It's got the strength of that diversification. Over 40% of our business comes out of the U.S. We've got a terrific consumer footprint and corporate footprint here in the U.K. So it's got that balance and the diversification. Now it's delivering the profitability.
Other banks are still taking provisions for PPI. I don't think you've done that this time. Is that something that's gone for Barclays? Have you dealt with that, or could it still come back?
No, we took a provision a couple quarters ago for PPI. We think we are well reserved. What we are seeing gives us comfort that we've got the right reserve level. So never say never until the PPI process is done sometime next year. But right now we are well reserved and think that we're in a good place.
Yeah, it's a gift that keeps on giving for somebody, I'm sure, Jez. If we talk about what your shareholders are looking for at the moment, you've, of course, had the high-profile appearance of Edward Bramson as one of your shareholders on the roster, more than 5%. Update us on your talks with him. I know that your investor relations team met him previously. Have you now met him? Have you heard from him directly?
Yeah, so I've met with Sherborne once, and our team has had a number of conversations with them. We still have not got what strategy he might suggest that we consider, but it's a very cordial conversation with them. We hope to talk to him, like all of our major shareholders, after the results that we've just announced today. But we're going to stay engaged with all of our shareholders, but continue to execute the strategy that we laid out in March of 2016.
Do you hear any shareholders questioning the transatlantic strategy, questioning the investment banking part of your business, Jez, or is it just something we like to talk about in the media?
No, I actually think the shareholders are quite supportive of the strategy as we've articulated, including the investment bank. The investment bank has had, in the first half of this year, it was a record 6 months for us in terms of leading debt underwriting and where we are ranking globally. We were the third largest underwriter of debt globally in the first 6 months of this year. It was a record 6 months for us in terms of our M&A fees. So we think the investment bank is functioning, but so is the consumer bank, so is our credit card business, so is so is our private bank. So we like how the bank is performing overall, and we like the strategy. And the shareholders, quite frankly, have been very supportive of management. Now all we need to do is to get the uncertainty of Brexit behind us, and hopefully people will start to look more favorably towards the British banks.
Yes, indeed. I'll talk to you about Brexit in just a moment. Just on what shareholders are after, how happy are they about the level of return of cash to shareholders? You haven't had a buyback in some 20 years. I know we've talked about that in the past.
Yeah, so we have more than doubled our dividend this year versus last year. We announced at the interims a 2.5 pence payment and reaffirmed 6.5 pence for 2017. We are at our end state capital level. We have 13% CET1 ratio. That's where we want to be. And therefore, going forward, as we generate returns like we've generated today, that will be excess capital. And we look forward to returning excess capital to our shareholders, either through dividends or stock buybacks. And that's what awaits us in the future of this bank.
Let me ask you then about Brexit, Jez. Do you plan at Barclays? Are you planning for a no-deal Brexit? Has that become real in the boardroom at Barclays?
Yeah, we have to plan for what people call a hard Brexit, and we are doing that. So where we are with our subsidiary bank in Ireland, in Dublin, what we are doing in terms of relicensing our branches across Europe to be branches of our Irish bank, what we'll be doing in terms of putting capital into that Irish bank, doing all of that so that we can continue to engage with our European customers and clients tomorrow the way we do today, irrespective of what happens with the Brexit negotiations. Obviously, I think everyone would like the uncertainty of the Brexit discussions to be resolved as soon as we can. I do think it's weighing on the UK economy to a degree. But as a bank, we have to prepare for whatever eventuality is going to come our way from the negotiations with the European Union.
And just to end then, what is the biggest downside risk for your business in the second half of the year? Is it Brexit or something else?
I think the biggest downside risk for all of us is the major central banks are beginning to move out of the quantitative easing and accommodative monetary policy that they've had since the financial crisis. And we believe that is a necessity. But as the central banks do that, how the economy will recover is a challenge, I think, for all of us.